Hi, I'm Nicola Kefalianos, a Gen Z uni student wanting to get onto the impossible feeling property ladder, and this is my dad, John. He's a mortgage broker and a property developer.
Thanks, Nicola. My name is John Kefalianos. I'm a finance broker and also a property developer and investor. I actually have a passion for helping first home buyers buy their first property and have helped hundreds of first home buyers achieve their goals. I've also been involved in a number of transactions in property developments, built over 100 houses over the last 10 years. So I've got a very good understanding of property. I'm here to help you, Nicola, achieve your goal of buying your first property.
So I know you've always been big on you won't give me money, but you'll give me knowledge.
That's right, Nicola, because I believe if I give you the right knowledge, you'll be able to achieve more than what you would if I was just to give you money.
So this podcast is going to tell you how to get into your first home sooner and for less. Dad's told me that the first 10 episodes are going to be about the pillars of property. Dad, did you want to explain a little bit about more the first episode?
Sure, Nicola. So the first step is how to save for a deposit and also a little bit about how banks and borrowing works, because they're one of the two key things about buying a property is knowing what deposit you need and how the banks work so you can borrow the money to be able to buy that property.
So how much of a deposit would I need?
That really depends on the type of property that you want to buy for your first property. So, for example, you could buy a house to live in, of which you can potentially buy a property with a deposit as low as $20,000.
Wow, that's low.
And that's because of some government subsidies and grants that are available to help first home buyers get into the property market. On the other hand, if you were to buy an investment property, your deposit would probably be around 10 to 15% of the property purchase price. So for a $600,000 property purchase, you'll need a deposit of around $60,000 to $90,000, depending on where you're buying, which state you're buying in.
Why is that such a difference?
It's mainly because of those subsidies that the government's offering for first home buyers to get into the property market. For example, in South Australia at the moment, there's no stamp duty for first home buyers buying a brand new property. There's also grants and there's also government guarantees available too, which we can go into later.
So let's say my first home was going to be one to live in and my deposit would have to be $20,000. How could I possibly save up for that in the fastest way possible?
Well, let's break this down, Nicola. So understanding your situation a bit, and you're working part-time, working
Casual.
Yeah. Well, you're permanent part-time. So you're working hours in a pharmacy at the moment. You can potentially save between $1,000 and $1,500 per month if you were to save quite strictly, from what I understand. Is that correct?
Yes.
So let's just say you were to save $1,000 a month. You could save $20,000 over a period of, say, 20 months. Now, the key to saving is really understanding your expenses, knowing what you're spending every week and every month.
Put a limit to them.
And controlling those expenses, so not wasting money, still having fun, still spending money, still going out for coffees, etc., but knowing what your limit is on spending. So understanding what your expenses are, and at the same time knowing what you're earning, and also take any shifts that you can get. So for example, I know you get calls sometimes to go work on a Sunday, and you say no. That's $250 that you could have earned that Sunday, and that could have gone straight to saving. Whereas instead, you probably went out and probably spent $50.
Or just stayed home.
And did nothing. So to get to your deposit goal faster and setting a goal is very important, because then you know what you're trying to achieve. But it's all about controlling your spending and working as many shifts as possible to save that goal, get to that goal faster.
Apart from spending and saving, like watching my expenses, what are some other saving tips I could implement?
There are some
with my bank account and things.
Yeah. Well, I think it's important to set up a term deposit account where you've locked your savings away, or separate accounts. So you got your savings account and your everyday account. So your pay would go into your everyday account, transfer money across to a savings account or term deposit account, whether we then watch that grow. So you set your goal, and I think on some bank apps you can actually set savings goals monthly and track how you're going. So I would really say take advantage of your apps, with your bank apps, and whether you're with CBA or ANZ or BankSave, most of those apps have that ability to be able to do that.
I know I've found that. I've done that and I've implemented that, and I've found about a $6,000 growth over the course of the year because I have been watching what I've been spending.
How do you feel about saving money?
Pretty good.
So it's you actually watching that growth makes you feel good?
Yeah.
So, and having that money in a term deposit as well, you can actually earn interest on that money too. So
yeah, each month I think I'm earning around $60.
What have you changed, Nicola, in the last 12 months to help you save that deposit? What have you done that's different?
Well, in the last 12 months, I have changed jobs, moving from a different pharmacy where my pay has increased significantly.
Yep.
But not only that, I saw that my account was not increasing at all because I just would transfer from my savings into my spending every day. Every time I wanted to buy something, I didn't have a limit on my spending because I just thought, oh, free money, it's mine. Like, I just keep on going spending. I was talking to you about how a way to stop this, and you said go to the bank and set it up. I asked you multiple times to come with me, but you were like, just go by yourself, it'll be fine. So I went, they set it up for me. I've locked my account now, my savings account. I'm no longer allowed to transfer between the two, only transfer into my savings.
Okay, I didn't know that.
And if I wanted to transfer out of my savings, I have to go to the bank. And the other week I had a lot of spending, so I set a limit of $1,000 and I had a lot of spending and it got around $300, and I was a bit freaking out because I had lots of things to pay for because I had events coming up and things. So I just had to watch my spending, eat at home, and put a limit to it. I'm really happy with the growth I've seen in my bank account. Do you think any other apps are worth it to track my spending and saving?
Just like you're tracking your saving on your app, which is your banking app, you can also track your expenses, which I'm not sure if you've started doing yet. So you can actually download your expenses and actually tell you what you're spending on different things.
Oh, they're the monthly statements?
You can get monthly statements, but you can actually download your expenses of what you're actually spending. So a lot of bank apps have budgeting tools and expense summaries, so you can actually see I'm spending $500 a month on dinners, or categorizes your expenses. So I think tracking your expenses through your app as well is very good.
Is it a good idea to put some of my savings into shares?
At the moment, the way interest rates are being quite high, you're actually earning decent money in the bank, which is around 4.5% to 5%, depending on which bank you're with. Shares can be good, but they're also risky as well. So shares can go down.
And they fluctuate.
And I think that's where you are in your life at the moment. You're trying to save. You're not in a position where you can take risks. I'll probably say keep the money in the bank, earn your interest that you're earning, rather than put the money into shares where you can potentially lose that money. So we're going to do a whole nother episode on grants and what's available in each state. So we won't really go into that into a lot of detail now, but I'll quickly just touch on South Australia. So in South Australia, $15,000 first homeowners grant only available for brand new houses that you buy brand new, that's never been lived in, or you buy land and build. There's also no stamp duty.
What's stamp duty?
So stamp duty is a government fee which equates to around 5% of the property value that you're buying.
Whether it's land or
Whether it's land or build. So basically the value of the property you're buying is you're paying 5% stamp duty. So say, for example, now you're buying a house for $500,000.
You need to pay 5% stamp duty.
5% stamp duty, with stamp duty and transfer fees, which is all government fees, which is around $25,000. So by buying a brand new house, you can potentially save $25,000 on a $500,000 property, but that goes up obviously the higher the property value is.
Yeah,
too.
But that's only applicable to first home buyers.
Only to first home buyers and only
that's
for brand
another
new
advantage.
houses. Yep. So stamp duty, first homeowners grant, and there's also another scheme available called the Federal Government Guarantee Scheme, where you can borrow up to 95% LVR, which we'll touch on later. So you can borrow 5%.
Is that the loan to value ratio?
Correct. So 95% LVR is the loan to value ratio, which is 95. So let's just say, for example, you're buying a house for $600,000. The bank will lend you $570,000, which is 95% of $600,000.
That seems pretty easy.
And that's with no mortgage insurance, no lender's mortgage insurance, which again we'll touch on later. Do you know what lender's mortgage insurance is?
No.
So lender's mortgage insurance is a fee that the banks charge you to protect themselves.
Oh, in case I can't successfully make my repayments.
So normally anything above 80% lend,
okay,
a bank will charge you mortgage insurance, lender's mortgage insurance, or LMI.
So definitely with 95% they'll charge me that.
Not for first home buyers, because this is the government guarantee scheme where you can borrow 95% with no lender's mortgage insurance.
Oh, because the bank is the security.
Because the government's providing the bank the guarantee.
Okay.
So they don't have to pay mortgage insurance. So three things: first homeowners grant, no stamp duty, and no lender's mortgage insurance. So those three things on a $600,000 property could save you $50,000. A lot of benefits for first home buyers.
Especially if it's a new build or you're building.
Especially if it's a new build or building, correct.
So how much is this lender's home insurance? Am I even saving much?
So you mean lender's mortgage insurance?
Yeah, lender's mortgage.
LMI, lender's mortgage insurance. So LMI can vary, depends on how much you're spending on a property and what deposit you have. But this would generally range from $10,000 potentially up to $25,000. So, but on that example of buying a house for $600,000 and borrowing 95%, mortgage insurance will probably be around that $15,000 to $17,000.
So it does save us a lot.
Definitely saves you a lot of money. Yep. So definitely worth taking advantage of.
So we've just been talking about how to save for my first deposit. I've heard people don't actually need a deposit to buy their first house. How does that work?
Very good question, Nicola. So that is actually true. So you can actually buy a house with no deposit, and that's where someone in the family can help you.
Someone like you?
Someone like your parent, yes, can help you with a guarantee. So what that means is they might put up their property as security, but then you borrow the money in your name with our property as guarantee, which then doesn't require you to have a deposit. So technically, yes, so you can buy a house with no deposit, but you're going to be saving for a deposit to go towards your first house.
Well, maybe we can do a bit of both. You can help me out and I can save as well.
Potentially, yes. If you can prove to me that you can save for a deposit, I might be able to help with a guarantee.
So how do I actually know how much I can borrow?
So that's actually a whole new episode, which we're going to go into next. And that's talking about borrowing power, what banks look for, what you need to do to increase your borrowing power. And we'll touch on that at our next episode.
So with all three schemes in place, as well as me saving for a deposit and you helping me out, could you please recap what we've just talked about for all the first home buyers listening?
There's several government schemes available to help first home buyers to buy their first property. And that's you having to save your deposit, because I think that's you will be saving for your first deposit. There's the first homeowners grant of $15,000. There's the government guarantee scheme where you can borrow up to 95% with no mortgage insurance. And there's also the no stamp duty available, which is available in some states at the moment. So they're the three main government grants that are available to help first home buyers get into the property market, and mainly to buy a brand new house or build a new house. So that's a quick summary of what the grants are that are available. Really understand what your expenses are and what you are spending every month, and try to limit your expenses. So once you've set your budget and you know what you're spending with your income and when you are working, try to take on extra shifts. So you're working part-time, but you get calls to come into work on a Sunday, for example.
Almost daily.
Try to take as many as you can without compromising your studies or anything else you're doing. So try to take on any extra shifts where you can, because that extra $200 that you're going to be earning can go straight to savings. And your savings at the moment is say $1,000 a month, but you might be able to save an extra $500 per month, which would half the time that you need to save up for a deposit.
Get my deposit.
So, and I know you like achieving goals, so set your goal high on what you can save.
Yeah.
Set yourself a target. Use your app. Control. Watch your savings go up, and save that deposit faster.
Well, Dad, this has been an awesome episode of learning how to save for my first deposit faster. So I look forward to learning how much I can actually borrow.
We're going to go through what banks look for when they're lending you money, how much you can borrow, some tips on what you can do to increase your borrowing capacity, and in general, how banks actually work. Yeah, what they look for. So that's our next episode, which I'm looking forward to, Nicola.
See you next week, guys. Thank you so much for listening. And thanks, Dad, for teaching me so much.